Okay, guys. Recurring guest Max Resnick sort of has an open invite to the show, but there's been a lot of discussion recently about Solana ordering and transaction pipeline stuff. We'll let him dig into that, but it's a really good time to have him back. It's always fun to have him on the show. He usually has some pretty hot takes, and also just a good guy. So, Max, welcome. How long have you been at Anza now?
It's been a little over a year now. I started at Anza in December of last year.
Nice.
2 years ago now, yeah.
Okay, so like experience thus far. Talk to me about it.
It's definitely been interesting. I think it's given me a new level of respect for sort of the people that I used to be super harsh critics of at Ethereum, because it's a hard job when you're like actually steering the protocol and there's so many interests and you're not going to please everybody. People are going to be super mad at you for one thing or another. And then I think the other thing that I didn't realize is when you're on the other side of the coin, so like when you're inside the like deep state apparatus, whatever you want to call it, you have this like level of reach of your ideas, which is very powerful, but also very double-edged sword. Like if you have a bad idea, everybody's going to know about it. And so you really have this kind of mandate to get it right. So yeah, new level of respect for the people that work on the protocol. I still like have a lot of disagreements with them. I think they like got a lot of things wrong at Ethereum, but I have like a level of respect for the magnitude of the role, and sort of there are other considerations that you have when you're doing this stuff, which is not just how do I make the protocol as good as possible? How do I make the best designs as possible? Like there's a lot of more variables in the picture. And so I sort of, have mellowed out a little bit and like, wow, yeah, those guys I was criticizing, like they were thinking about some things that I wasn't thinking about.
Did you plan to start the show like this so that we wouldn't lose like 75% of the listeners right off the rip? This is like a way to appease a lot of the people that you had pissed off previously.
Yeah, just appeasement. It works. It always works.
Okay, what are you working on? Like, so I remember that. So I say you're a frequent guest of the show. Last time we had you on, I guess, was actually a year ago, I think, was when you were going to Anza, right? So yeah, like I think that was the last time I had you on. And I remember you saying like the first 90 days you were going to spend like digging into the code, which is kind of like a hilarious, but also like very reasonable thing to say. It's just hilarious insofar as like, it seems like very self-evident, right? But okay. So talk to me, like, what are you working on? I don't know, on a daily basis, and like, what have been your big pushes, right? Like we can get into the whole MCP and like sort of one of the big kind of inspirations for wanting to come over to Solana, but like talk to me about what your day-to-day looks like and what you're really like been working on since the start and then up to now.
Yeah. So I think a lot of my goal is really to be a person that helps the engineers, who are the ones who really know their specific aspects, to understand what is important from a product perspective and what is not important from a product perspective. I'll give a specific example. So in the TPU pipeline, the transaction processing pipeline, which is a super important thing for the chain as a product, right? You really want consistent landing experience. And there's a lot of aspects of that thing that might or might not matter to users of the chain. So part of my job is just to say, let me go talk to those users, whether they're traders or apps that are landing, and let me understand which types of behavior are really impactful. Like, oh, if you send a transaction, you don't get an acknowledgement and you have no idea what happened, that's a really bad user experience. Maybe if it gets delayed, how bad is that? So that we can understand what the priorities are and what metrics we should be optimizing for. And so in general, at a very high level, my job is like, how do we make Solana, the product, as good as possible and focus on the right things that actually matter for end users? Then there's obviously this whole MCP, which is a huge research initiative and scoping initiative that I've been working on a lot. We've done a big vote on inflation, which actually happened like 9 months ago. It feels like forever ago. Yeah, I think as basically the only economist working on the chain, sometimes it's just you're there in the conversation. You're like, hey guys, like we need to charge fees, like we need to make money as the chain, and that's like a lot of value add, even though it just feels like you're saying something that's totally obvious. But for engineer that's not their job. Their job is to make the thing go fast, and then when they realize, oh, make the thing go as fast as possible, actually might not make the chain make as much money as possible. So it's been definitely a learning experience from both sides, where we've kind of like I've learned so much about engineering. And then I've given a little bit of like a push, like, hey, these are some economic considerations. I think Solana as a whole in the core community is much more trading focused now, partly because I've been just pounding the drum of Solana's for trading. That's where we make all the money. That's what we should be optimizing for. Kind of internet capital markets over payments chain. And at the same time, my kind of point of view on core development and everything has been totally shifted. And most of the problems really are engineering problems and not research problems. And then there's a few that are research problems, and you really need the research and the kind of economic perspective to get those right. I think you need both of those to really succeed as a blockchain.
So like you said you had a newfound respect perhaps for like some of the, disagreements you had with people when you were working on Ethereum. Like what stands out specifically? Like now you have like substantially more power, I would say. I don't know if that's exactly like in decentralized systems, do we want to talk about
influence?
Right. But like, I think maybe like what I'm saying here is like with regards to Ethereum, there was like a ton of people making, providing ideas and contributing, and like, you had to juggle, maybe you had, at many times you were in like direct opposition with how people felt, right? Like, 12-second block times, like there were just some very fundamental, like, differences in value at Ethereum, but there was like a wide sort of group of like a wide net of contributors. It does seem like in this role, you have a more, right, like influence or power, however you want to describe it. With that said, what, like when you say you have newfound, respect as a function of viewing this, right, like in a new lens, what specifically? You can get as technical or as non-technical as you want, but I'm curious what you meant by that.
Yeah, so everybody has good ideas and bad ideas. Some people have a different hit rate than others. But I think one of the things that I realized in this role is if you're somebody like Justin Drake at Ethereum Foundation, every single one of your ideas that you put out there is going to get blown up in a massive proportion. And if you're somebody like in my role back in Ethereum as sort of opposition, kind of a smaller player, the bad ideas automatically get filtered out because they just don't get shared. And so you're kind of automatically auto-filtering the quality of the things that people hear about that are your ideas. And so it kind of makes the average level of your ideas look worse because they just get blasted out. Like,
yeah,
if I say something, then that like, I guess I would say like ACE, application controlled execution, I think has gotten like a little bit more blown out of proportion in terms of the importance than I actually think it is. Like it's more important. People think it's more important than I think its importance is right now. And that's just because like in the role, when you write a blog post with Anatoly about application control execution, everybody kind of jumps up and says, we got to go do this. I think this probably happened for Justin Drake too, with like execution tickets or ePBS, where it just kind of creates this like massive, like you have to be very careful about what you say, because when you do say something, it's going to go out and people are going to judge you based on it.
Okay. So then let's talk a little bit about like the initiatives you have pushed. MCP obviously was like sort of one of the driving factors. Like you had this idea, not necessarily unique to you, but this was something that you felt very strongly about. And this was like a lot of the inspiration for you moving to Solana. ACE, like let's talk about like, maybe start wherever you want, but I'm curious about like the specific initiatives.
Yeah, so MCP is certainly not a unique idea to me. I think Tolly was even talking about it before I was. It's already live on Sui in some form. A lot of chains are thinking about it now. But I just felt that, first of all, it's a lot easier to change the architecture of the blockchain than to change the network effects of who's building on the blockchain and how much activity is there. And so Solana being kind of the number one place where activity is happening right now, I thought it was really important for the success of crypto overall for it to happen on Solana or, previously on Ethereum, where all the activity is. And so I think even though the technical changes like on a monad and Solana will be very similar, the kind of magnitude of shipping it in a live chain that has most of the activity going on it is much more important for the success of the industry than just shipping it in general in a technical aspect. And I kind of felt that if I didn't go all in and sort of make it something that I really, really want to get done and just chip away at it every day, that it wasn't going to happen. And I had an interesting conversation with Zaki Manian, actually, and he basically said he had a similar experience with Tendermint, where it's like if he didn't really push on this thing, it probably wasn't going to happen. And so I think that's sort of where I was like, this is really important for the industry, in my opinion. If I don't do it, nobody's going to really push for it in Solana. Even though Tolly really wants to do it, he doesn't have the kind of day-to-day time to just crank out all the details and get all really in the weeds and make sure everything is ready to actually get approved. So that was kind of my experience.
Okay, so give us like 15-second reminder as to what MCP is, and then tell us where you're at currently working on this, and then also like some of the hangups or, you know, things you've subsequently understood now, having worked on it for a bit.
At a high level, it's basically designed as a solution to MEV, and in particular, the parts of MEV that are ordering and censorship from the proposer, from the leader. So these are the kind of things that on Ethereum, they're selling in the PBS auction. And I think they basically are very bad for a blockchain as a trading venue. So the whole point of MCP is to provide a property called censorship resistance, which basically means when you send a transaction, it gets in the same block or the same time window, and nobody can keep it off the chain. The reason that's important is, you know, first of all, the most important part of MEV is reordering. We actually know how to control ordering at the chain level. In replay, you can just replay the block in whatever order you want. As long as everybody orders the block the same way, that's kind of the way that the block should be ordered. The problem is after you make that change, then you have this issue of people censoring to try and affect the order that way. And so to close the loop, you kind of need to address censorship resistance as well. Once you do those two things, so you have the protocol enforcing ordering and you have censorship resistance, then you really have what I would call a solution to MEV. And that's probably a pretty big claim for some people. But I have a more narrow definition of MEV than some people, which is I think MEV should be basically attributed to the validators. This is originally called minor extractable value. So a trading firm trading on the chain, making some money from trading is not minor extractable value. What we really should be talking about in terms of minor extractable value is the value that the validator gets from their privileged position as the block producer. And I basically want to send that value to zero because I think it's bad for the chain as a product.
Okay, but distinguish how, so just at a high level, distinguish this from Ethereum also saying that they want the applications to internalize value, right? Or so in your scenario, I think you're saying, you know, trading firms doing arbitrage or, you know, certain not highly extractive strategies is the way markets work in general. But this is also a claim that was made on Ethereum initially, right? Now they have PBS, a different design, and you think this is fundamentally bad, but what is in your opinion, what distinguishes here from, it's sort of the same concept to me at a non-technical level, which is okay, we want this to be, you know, internalized at the app layer as opposed to this, you know, sort of extractive validator level. Maybe you can talk to me a little bit about how you view this differently.
Yeah, it's sort of a subtle point, but all markets, really, we measure the efficiency of markets in terms of the spread. So the spread is the difference between the best bid and the best ask. And it's often also called the round trip cost. So if you trade one way and then trade back, you're kind of paying the spread. I guess you're paying 2 times the spread if you round trip. But that is a measure of the efficiency of the market. And the key contributor to that is sort of how much toxic flow. So how much do you trade against people who know better what the price is going to be than you? And how much is non-toxic flow? So how much is just ordinary people wanting to trade for whatever reason, risk management, just because they're chasing this thing, or maybe they have a 6-month horizon and you have a 30-second horizon. That balancing act between toxic and non-toxic flow is really what decides the spread. And the more you help the market makers avoid the toxic flow, the better the spreads will be and the better the liquidity will be. PBS as a construct, just if you kind of go through the motions and crank out the details on how it actually affects market makers, it really advantages the toxic flow. Or in other words, it makes the toxic flow cost to the market makers as high as possible. Every time a price moves and you're vulnerable, you get picked off. And that makes markets less efficient. So from my perspective, it's very obvious if you just crank through the details of what does a spread look like? How is it determined? Well, it's the balance between toxic and non-toxic flow. is Ethereum PBS minimizing or maximizing the effective toxic flow? It's actually maximizing it. And I want to build a system that minimizes the effective toxic flow so that we can have tighter markets and more liquidity and more trading.
Okay, so then like to finish up on this, what is the current status of MCP? Like where are you and where is, I don't know, the community as a whole?
Yeah, so it sort of means different things to different people. But where we're at right now, in the last core dev meeting, we had a discussion, and I think there's kind of, now we're getting to a point where there's broad acceptance in core about the censorship resistant property. There's another property that we call hiding that there's still a lot of debate about whether we need that. We have a design that we're comfortable with. We have that design that kind of covers the censorship resistance part. And I think there's pretty broad agreement in core that this is what we should be doing. And we're basically going to start building it very soon. So that's a good spot. Then there's a bunch of other details like, do we need the hiding property eventually? Should we have more regional consensus, et cetera, et cetera? Those things are still being debated. That core part of we need multiple proposers. We have a core design that gives us multiple proposers that we can implement is already done. And we're sort of doing early prototyping work on that. And we're going to try and bring it to production as soon as possible.
Just out of curiosity, I know you mainly, and you're chief economist, right? Not like chief engineer, but how much like work do you do with the code now? I mean, like we got Claude cranking out, vibe coded. Can you just Claude make MCP for me, make no mistakes? Like how much are you doing on a daily basis, like working with the code, or are you like primarily delegating out still to engineers? I mean, I assume you have to have some hands-on, with this stuff. And I think that's something you've been doing more of over the past year or so. But like, I am curious, like from your role, what kind of, technical chops you're working with.
Yeah. So I'm not implementing the production level feature, but I'm definitely with the new tools that have come out much closer to the code base, running a few experiments, I made a transaction sender and tried to send it, and I made a custom scheduler, very simple custom scheduler implementation, like this kind of stuff, just to really feel what's going on. Because you can't really just be like this ivory tower guy, like, oh, this is how everything will work out without real hands-on experience. The tools have helped with that. I'm definitely not implementing the final feature that's going to go into the production code, partly because Alessandro would not be happy with my code quality, but partly because there are people who are better specialized to do that. And this type of stuff I work on is so sensitive to the protocol. It's safety and liveness. It's consensus. And so if you make one mistake, or Claude makes a mistake because you didn't give it all the context it needed to do it right, then that's the kind of thing that could bring the chain down. So it makes sense to have people like Ashwin or our consensus experts to really drill into those implementation details and make sure that everything is correct.
Yeah. Okay. So then let's go to ACE. This is something else you've been working on. What is that, and where are you at with that? Also, like I haven't followed this stuff as closely recently as you can probably tell, but how much, like, is there relevance with MCP here, or are they like completely distinct? Like, talk me through that as well.
Yeah. So ACE is a rebranding of ASS. So ACE stands for Application Controlled Execution. ASS was, I think, the original. Well, I called it execution flags in the first version. I think Yuki renamed it to ASS, which was application specific sequencing, which was a great name. And then Kyle Samani was like, we have to rename this. This kid, he DM'd me. He was like, you have to rename it.
He's the one who actually pulls the strings. At the end of the day, it's Kyle.
He's the one who actually, well, on the marketing stuff, definitely, I'll listen to him when he tells me I got to change the name. So we changed the name to ACE, which I guess is a little bit more PC. But it was kind of our response to what Hyperliquid was doing with delaying certain transactions to make the market more efficient. And the idea was we're a general purpose chain. So we're not going to make super heavy sequencing specific decisions for any one application. But we want to try to give applications as much flexibility as possible to, just like they can write whatever code they want, they can also have their transactions sequenced in whatever way they want. And originally I was basically saying it as this is an important thing for MCP. Like it's a kind of selling point of MCP is that we can have generalized application controlled execution. And then there was kind of that took off. So Jito started saying, oh, BAM is also going to allow application controlled execution. Then the temporal folks, KV, came up with this asynchronous market queue, which is sort of a way to do it sort of within the program. And if you have enough protocol enforced ticks, you can do it that way. And so it kind of took on a life of its own. Totally wanted us to build it into the existing scheduler before MCP. And so it kind of got much bigger than just the initial introduction of it in the article.
Okay, so like then where are you at with it?
Well, I think the problem is with all of these things, if you have one version of it that everybody uses and it's all consistent, then it's great. If you have 5 different versions of application control execution, then
you're right back to the start. Yeah.
So we've tried to do a little bit of standards work in terms of what these things would look like. We have a design that sort of, I got everybody in the room who was building these sequencers. I said, hey, let's not all build a completely different version of ACE. Let's build a version of ACE that everybody can be comfortable with. And so hopefully that gets in as like the kind of baseline version and people can build on top of that. But I would at least allow that specific application of I want a certain type of transaction, maybe a taker transaction, to be delayed slightly. It would at least allow that just by putting a specific key.
Is that the idea, like with taker speed bump, right? That's what exists on Hyperliquid. Like, explain that, and then also how is that being implemented here? Like, you said that was sort of the inspiration, and obviously Hyperliquid has had success with this, but slightly different, like consensus model as well. So, yeah, talk to me about like that specifically.
The reason you want to do that, just going back to the early conversation, is you want to build efficient markets. You want to make the spread tighter. You want to kind of nerf the toxic flow. And one way to nerf them is to speed bump them. So Hyperliquid has done that. Now you see it on a lot of the prediction markets, especially relevant during the game, because if somebody throws a touchdown, the line's moving and you need time to move your lines. So this is now gaining a lot of traction across the board. And one way to do it is let transactions specify a particular key, an account key that actually corresponds to an amount of delay. Then the application says, if you want to do this type of operation, you want to do a taker operation, then you better have this key in your access list. And that is a way to enforce. Then the scheduler says, oh, you have that key. Let me put you in this other lane that's a little bit slower. And you can have the speed bump enforced that way. So that's one way to do it. Another way to do it, which is something I didn't fully appreciate before I came to Solana, and then I think Benedict was the person who finally explained it to me in a way that I got it. But there's this thing that goes on in Solana scheduling, which is that all prioritization in the default schedulers is based on priority fee per CU. So not just overall priority fee, but it kind of depends on the size of the transaction. If you have a really small transaction, your denominator is also going to be, per CU, it's going to be basically amplifying your priority fee. So you can spend a relatively small priority fee on a small transaction and be boosted up. And what people have started doing is, especially for the Prop AMMs, they have a very small Oracle update, which is effectively a cancel.
Yeah.
And then the take operation is, say, 200,000 CU. The Oracle update is 200 CU. And you can imagine that puts you way up in the scheduler hierarchy.
Like the vast majority of transactions now are like Humidify Oracle updates, right?
Yeah, a lot of transactions are Oracle updates now. And those are effectively reposition, cancel, and replace type of operations. But they're done in a way that most of that happens when you actually call the thing, and it's just sort of updating a number. So it's very cheap to do.
Yeah. Okay. So, that's a good segue. Well, I had Benedict on talk about Prop AMMs. They have like really burst onto the scene now. And there's also quite a bit of scuttlebutt on Twitter about what's going on with the Solana transactions now. And I'm sure you have to take like somewhat of a reserved approach with a lot of these teams bickering. Okay. Prop AMMs. My understanding is that it is a black box, basically, where there are some HFTs on the other side or something that looks like an HFT, and they're providing much tighter spreads now because it's not like on this AMM curve that, all of the problems with MEV and ordering that there were So, like, talk to me about this a little bit, and then what's going on currently.
Yeah, so I'm sure you've had several guests talk about this, but let me say what I think the key features of them are. So the first one is on-chain colocation. A lot of the traditional finance world, you have two sides of your market making operation. You have your alpha generation. These are people who kind of predict where the price is going. They run a bunch of regression. These are the quant type people. And then you have the order execution. These are kind of the high frequency engineering type people. They're playing this very specific rules of the market microstructure, getting orders there as fast as possible, canceling when they don't arrive in time, etc. And what's happening now, usually in a traditional market making setup, all that stuff would happen on your co-located box on the trading floor, maybe, or right very close to the trading floor with a cable that goes there very quickly. But we could make it even faster if it was just inside the trading computer itself. And that's what's happening now, is a lot of the order execution is really happening inside of the Solana execution engine. So it's sort of on-chain colocation. That tick to trade time, so the time between when your server that has your order execution reads and responds to stimulus from the exchange, is effectively zero at that point. Then the second part is, how do we get the alpha? Well, we just send the Oracle update. We send the Oracle update into the system, and then all of our on-chain agents are battling it out with transactions inside the Solana system. So that's feature number one, which is on-chain colocation. Feature number two is this priority fee per CU. The Oracle updates are very small. That effectively can be like a cancel prioritization mechanism. There's a little bit of intricacy to that in that we're not always tie breaking by priority fee per CU. Sometimes it's first come first serve as well, depending on the scheduler implementation. But that's an important feature. And then the third feature, which doesn't get talked about a lot, is something called the deny list. And coming back to this idea of you want to make toxic takers feel the pain as much as possible. What if you identify the toxic taker and you said, you're not allowed to trade with me? And this is not really a new idea. Like the way that Citadel does payment for order flow is let me go get all the non-toxic flow from Robinhood, trade against that. And I'm going to assume it's not toxic because it's Robinhood front-end users, right? Similar idea on chain is I try to go and look at who is sort of trading toxically against me, run the markouts on them, and then blacklist or deny list them. Okay, so that's pretty cool innovation. It doesn't get talked about a lot. I think people who are not who are laymen sort of see that as an unfair thing, but it's not new and it actually makes markets way more efficient. So I think it's pretty cool, despite the kind of natural icky feeling you get when you think about, I set up this trading system and then I got told I can't trade because I'm not retail and I'm actually trying to pick these guys off. But retail really loves it because they don't get deny listed. They get to trade at good prices. So I think that's a core innovation that doesn't get talked about a lot, but it is part of the important success of these things.
Yeah, and I think you made this quite, controversial tweet one time where you said that I think it was Sol USDC pair was quoting tighter than on Binance. Am I getting this right?
Mm-hmm.
Okay, and that was as a function of AMMs, right? Oh, sorry, Prop AMMs. Sorry.
Yeah, so few caveats on that. So first of all, if you're not
qualifying,
yeah, as Alessandro had a great tweet today that said the more qualifiers you have, the less impressive the statement is. But if you're just normal retail on Binance, you get charged this huge 10 basis point fee. So at that point, even trading on Ethereum, you're getting a better price than you are on Binance. But let's ignore that. Let's suppose you have the highest fee tier on Binance, which is like 1.7 bips or something. If you're kind of highest level market maker on Binance, then it starts to become a closer race. And I see some tweets that are like, oh, well, Humidify is quoting 0.1 basis points wide, which is just, if you know anything about these markets, it's really obviously not true that they're doing this because you wouldn't make money like that. Humidify is interesting in that it seems to be one of the only Prop AMMs that isn't using a deny list. So they kind of allow all comers. That might be part of the reason.
What's your theory behind that?
I think partly they, for a long time, had just kind of better fares, meaning they had a better view of the price and it was getting delivered faster. They had kind of better transaction landing than everybody else. And so they were kind of like, let's just let people trade because most of it will be ARBs against the other Prop AMMs. And so it'll actually be good for us. So anyway, that's part of the reason why they have a lot more volume is they kind of let anybody hit them and assume that on net they're going to be positive there. But yeah, there's obviously if you kind of let a bunch of toxic takers hit you and you're filling retail at 2 basis points and you're filling the toxic takers at -1, -3 basis points, whatever, you can on average have a spread that looks like 0.1 basis points, but that's not what you're filling retail at.
I see.
So that's part of what's going on there.
Okay. I have more questions on this, but you're going to right now read an ad for Ellipsis Labs, my sponsor. And you're gonna add in some color, right?
Yeah, of course. One of my favorite Solana native companies, Ellipsis Labs. Okay. Are you guys ready for the ultimate ad read? The Gwart Show is sponsored by Ellipsis Labs, backed by Paradigm, Electric Capital, and Han Ventures. Eugene explicitly told me to remind you that they're backed by Paradigm. The founders, Eugene and Jerry, have experienced Citadel, Jane Street, maybe internships. I don't know if those were full-time jobs or not. In the Solana core team, Jerry was at Solana core for a while. And then they launched their order book DEX Phoenix, where they've done over $80 billion in trading volume by making on-chain order books competitive with centralized exchanges. Well, this is like kind of an outdated ad read here because I think they've done a little bit of what
they've done. Yeah, this is what they've done so far, but they've done more. Yeah. You can talk about Gavel as well.
Then they did SolFi, which was one of the first very successful prop AMMs. Then they did Gavel, which is a fair launch pad. And recently at Breakpoint, they announced Phoenix Perps, which is a fully on-chain native Solana prop AMM based perpetual futures DEX, which I'm super, super excited about. They're hiring New York engineers. You can work with a small, focused team that's results-driven, collaborative, and use a modern stack. If you're an engineer who wants to work on infrastructure that's already proven itself in the market, go to ellipsislabs.xyz.
That was fantastic. All right. We don't need to cut any of that. That was perfect. Okay, so I want to go back, though, to the Prop AMMs, Humidify. So why has Humidify been so dominant as of late, right? And it seems like they've recently, and granted, I haven't followed this as closely as you have, but it seems like they've kind of had almost like some escape velocity. And from what I can tell, they are like, there's kind of economies of scale there. Can you like explain this dynamic and, you know, why have they been so dominant? The other thing I wanted to ask was, Humidify is quoting extremely tight on certain pairs, even to retail, right? Even like this two bips is like still quite good. Mm-hmm. Is this like I don't know another word for it, but like almost an introductory type price? Like, is this something that can persist into the future? Like, will this always be the case? So 2 questions there: dominance, and then super tight right now. Is this something we can expect, like, you know, going forward?
Yeah. So let me answer the second one. I think that this is here to stay. I think it's only going to get tighter from here, actually, especially if one thing that's not sort of happening right now is we don't have a lot of block trades, block order execution coming through. So that's a big source of retail uninformed taker flow. And if that comes in, sort of the balancing act of how much toxicity you have versus how much non-toxic flow would get even better than it is right now. So I actually think it's probably here to stay. We don't have fees on Solana, so that's a big part of the advantage is you don't get charged fees by the DEX. And then there's kind of very tight tick widths, which is good. Something that Citadel's been asking for in traditional markets for a while is to make the ticks on the order books smaller so that they can compete on price rather than on time or whatever other tiebreaker there is on the exchange. That's another feature that's great. And then we're just getting more competition, right? We've got Bison Phi coming in. They're obviously very smart team, and they're sort of only competing on Sol USD right now, but they're doing pretty well in that pair. We'll see what happens when they pick it up. And I think we're going to start to see even more experienced teams. Basically, why has Humidify been dominant? Partly because when they came in, they were the only team that was very good at landing because of the kind of alphas that Temporal had with Nozomi, and also good enough on the pricing side with the alphas that SCP had. on the alpha side, and that combination was enough to. I would almost see alphas as a head start on the Binance price, and landing is also a head start on the Binance price. So when you combine those two together, you get in ahead of time. And then the dynamic of it was the faster you land your Oracle update, you're going to be creating this arbitrage opportunity, and then all the arb bots are going to come in and cannibalize the other Prop AMMs. That kind of made it a winner take all sort of system where if you're faster, you get good arb flow and everybody else gets bad arb flow.
Yeah. So I guess so when I said, you said you think it's here to stay and will perhaps hopefully get even tighter. The reason I asked because, and I know it's not a perfect analogy, but I remember when we were looking at, PBS early on and just like Ethereum block building, there were either rumors or at times like substantiated, evidence that some builders were, at least from what we could observe, building at a loss. And the argument was perhaps that they were sort of crowding out, hoping to war of attrition type, compete and eventually have sort of a dominant market share on the grounds that they could, mine at a loss is like what the terminology Bitcoiners would use, right? Mm-hmm. For a long enough period of time that it would sort of just like ultimately crowd out the others. So that was like what I was implying there. But I am curious then, like to that end, is this Prop AMM dynamic, like, is it a winner take all? Or you said like BisonFi is now competing on Sol USD. Like where does this look 6 months and 2 years from now in your mind?
Yeah, I don't think, first of all, I don't think that Humidify at least is competing at a loss here.
No. Yeah.
I run the markouts. They seem to be making money to me.
Okay.
It's not $100 million a year that they're making, but they're making pretty good money. So it's certainly, they're not operating at a loss. The question of whether this is kind of winner take all, I don't see too many compounding effects, but often in trading, there's a bar above which you're a profitable trader. And then if you stack alphas on top of that, it's just kind of free money because you're already clearing the bar of profitability. Now I've stacked some more alphas and like, that's just pure profit. So the first, you have to stack a bunch of alphas to just be break even. Those all go to nothing because it's break even. And then the rest of it is just pure profit. So sometimes there's that kind of dynamic. I suspect as more sophisticated shops come in to this market that it will be more and more difficult for the kind of OG crypto native shops to compete. I don't think they would be mad at me for saying that. I think they would all recognize it as well. And yeah, it's going to be more about pricing quality as we improve the infrastructure. It's going to be less about who can land faster because it's going to become commoditized, all the tricks to land faster. And then it will really be about pricing. And then there's only a few firms in the world that can be competitive on pricing, and they're all trading on Binance. But it's not like there's only one market maker on Binance right now. There are a few. And it really comes down to different alpha levels. Maybe some people are good at mid frequency alpha. Some people are really, really fast. People have different skills. That's when you can see a multiplayer world. If it's all one game, or if it has these concentration effects like PBS did, where you get the order flow and you get the trading and you get everything together, that's when you see a 1% or 2% outcome.
Has SEP moved mainly to working on Solana? Do you know? Okay, well, let me preface this. Obviously, I'll say it so maybe you don't have to. Like, SEP was the builder behind Beaver Build and was like dominant on Ethereum since MEV was like initiated effectively. And they were definitely in the discussion often about being Ethereum aligned. Let's put it that way. So there was, I think Beaver was oftentimes, they weren't very public, but they were definitely ones who were giving opinions either directly or behind the scenes about how things should work out. And there were definitely arguments that they were they at least said that they wanted to see Ethereum do well. So anyways, all this is fine. I'm not like necessarily saying anything derogatory here, but a lot of people didn't even know they were trading on Solana for quite some time, right? Until Humidify came around. And honestly, I don't even know I think that like the token was really the first time people like truly found out about this. So it's kind of interesting. Have they shifted a lot of their focus to Solana? Do you know?
Yeah, I have some. I guess I won't comment on this. Just I think you should have Kevin on. And you should ask him about it.
Yeah, he was supposed to come on, then he bailed, but I'll hit him back up.
Okay. Yeah, I think there's just generally you talk to these trader type people and the game on Ethereum is figured out. So good or bad, whatever, I'm not going to say that, but there's nothing new for the traders to do there. It's kind of settled and figured out. And if you're somebody like Kevin who really likes to think about the market structure and find the little edges, even everything else equal, you're just going to want to be on the place where new and exciting stuff is happening. Add on to that there's a lot more retail volume on Solana now than there is on Ethereum, just because of Jupiter and DFlow and Titan and all the other aggregators. It's a better, more fun experience, and you make more money right now figuring out new strategies on Solana than kind of micro optimizing your strategy on Ethereum.
I wanted to go. So recently, our mutual friend Benedict, released this report on. I mean, you can give me the rundown, but like from my interpretation, it was that definitely users are getting really bad, at least relative to what's possible, right? Now, like, somebody paying 50 cents for a trade may not be the end of the world, but like maybe that trade its fair value is 1 cent, right? And they're getting either back run, front run, sandwich, whatever it may be, or the order flow is being sold. Anyways, explain to me what's going on. And like, I wouldn't say damning report, but it definitely was like pretty elucidating, right? And like, I'm sure you had some, I don't know, inclination on this, but yeah, like give me a rundown of that. I'll have him back on at some point though.
Yeah. So I will say what the data said and you can interpret it. Okay. Because obviously I should be a little bit careful here, but one thing you can look at on chain is there are these tip addresses. So transactions can sort of send money to specific accounts, and usually those are the landing services. So starting out with Jito, there's kind of 8 tip addresses for that. Then there was a wave of the Blocks route transaction landing service that had tips there. Now there's a new wave, Nozomi, NextBlock, Zero Slot, etc. These guys, you can kind of start to track those tip addresses and sort of see in the Sankey diagram where order flow is going before it lands on chain. And what Benedict did is he looked at Axiom, which is a very powerful, very large market share order flow provider. And he found that they were intentionally not sending transactions to the Prop AMMs. They intentionally wanted all of their transactions to go to market makers like Orca, Meteora, places that would allow backrunning, because a Prop AMM actually doesn't allow backrunning because it's not profitable to do so. And so he found that, if you look at the Axiom trades, those are not seemingly, none of them are going to the Prop AMMs when he looked at the data. And so, yeah, you can draw some conclusions from that if you want.
Yeah, like I'll ask and then you can decide whether or not. I saw some people in the comments afterwards suggesting that Axiom is sending order flow to Temporal, who is MEVing it, and there's a kickback there. Like, is there evidence of this, or is this sort of speculation?
I guess there's not a lot of other explanations for why you wouldn't be sending to the places that give your users best execution than the fact that you want to back run them. I mean, I think it's a reasonable explanation of the facts. I don't think it's necessarily the end of the world. Like, it's not like these guys are the first to invent back running user order flow. Certainly that was a big thing.
It's a permissionless market.
It is a bit of a dark pattern. And yeah, I think is it easier for you to charge that same fee when you show it to the user on the front end, or when you take it off on the back end when they don't know it's there?
Wait, can you just for a second, just to help make this tangible, when you say show this fee, what are we talking about here? At an actual nominal level, like if I go to make a trade, right? Like if they were to show me that fee, what are we talking? Like 10 cents, 50 cents, $10, $100, like it was during DeFi summer. You know what I mean? Because a lot of these things get lost in, they're so removed from you guys put them in CUs and and I oftentimes I'm like, well, what are you talking about? Because, for example, the Telegram bots, right? Like I used to use those 6 months, a year ago, and I just assumed I was getting wrecked, slipped, background sandwich for 5%, 10%. But I was like, okay, this is a runner, right? And I'm not worried about a 10% right now because this is going to be 100x. It never really ended up turning into that. But my point was that there's obviously I was extreme inelasticity there on my end, right? So, elasticity rather. So I'm curious, what like are we talking about in terms of what would this fee look like, and how bad is this, relative to, maybe TradFi trading venues?
Yeah, it can be quite significant. And I think the issue is the user doesn't usually know that they're paying it. So often with the Telegram bots on ETH, at least my understanding was that they usually didn't sell the backrunning rights. They were mostly extracting landing fees. But then on Solana, it's kind of both. Like, at least it seems like it might be both, where they're paying sort of a larger than needed landing fee, which is mostly getting kicked back to the app. At least that's the speculation. And then they're paying also in terms of the execution quality on their trade, because somebody is going to come in and back run it because they're not trading on the venue that's giving them the best price. So both of these are, it can be the difference in execution quality between the prop AMMs and the traditional AMMs can be up to 10 basis points on the major pairs. So it can be, you're paying like 5 times more execution quality for that, and then you're paying a huge landing fee. And I guess the users don't seem to care too much. But in my perspective, like from the chain health perspective, you don't really want your users to get fleeced for 1% every time they trade. You kind of want them to, you want them to have as much edge below 50% as possible for the system to work and be sustainable. If they're always getting fleeced by 100 basis points, then within, say, 81 trades, they're going to be down to 0 in expectation. Whereas, like, if they're getting fleeced for, maybe that's a bad word to use, but if they're losing sort of 2 basis points on execution, then they're going to stick around for a lot longer in expectation.
But this is, like, tell me if I'm wrong, but this is, at the end of the day, this is just like how much of a role can you play in helping to mitigate this, right? Like this does seem like very much an app level decision.
Yeah. I mean, there's almost nothing I can do about it other than to say, hey, this thing might be going on. But Benedict has already done that. So yeah, there's not something that I have a lot of levers to pull on as in my role.
Okay, let's move on a bit to, like, how's IBRL going? I was reading this morning that there's some German firm, like an exchange that offers 1.7 microsecond latency or something like this. And right, like we're talking 400 millisecond block times on Solana. How do you feel, like, because your whole pitch this entire time, like since I've known you, has been like, we're going to put trading on chain and we're going to create price discovery on chain. Square this with like maybe where we're at now, and then also the long run. Like, how do you feel about this? Like, is this still the sort of the North Star, right?
So absolutely it's still the North Star. And what does that 1.6 microseconds actually mean for the market structure?
Oh, I have no idea. Yeah, I'm just throwing numbers out there to scare you.
No, I just say that, like,
I just want you to work harder, dude.
People have like this very good platitude, which is often the correct heuristic, which is that faster is better. And certainly it is better for some things, but in particular in that context, what is 1.6 microseconds doing? It means I can see some stimulus from the exchange react with my order execution strategy in 1.6 microseconds, or maybe 1.6 microseconds times 2. That is very important if your order execution strategy lives off the exchange. If your order execution strategy lives on the exchange because you have on-chain co-location, then your tick-to-trade time, your reaction time is effectively 0. My point of view of how do we counter that? How do we achieve that same thing? Well, we're not going to have sort of out-of-protocol stimulus that's responding in 1.6 microseconds ever, because the speed of light exists unless we get rid of that unhealthy speed limit on. If Alessandro could, he would definitely remove the speed of light limit.
Well, are you working on that?
Faster. We'll get to it eventually. Once MCP ships, we'll start working on getting rid of the speed of light speed limit on the universe. But that thing exists, so you got to go kind of around the world, usually more than once, to get to consensus, unfortunately. So we're never going to have that call response stimulus in 1.6 microseconds. But if the agent is living inside the chain, then maybe it can react to those things in less than 1.6 microseconds and in effectively zero time at all. And I think that's sort of where we're headed. And yeah, if it was any indication of what you can do, we already have, pretty reasonable market structure on chain in the current system when people are running the software that we give them. Another question when they don't run that software, but when we give them the software and they run it, we have markets that are working pretty well, even with the round trip time that's many orders of magnitude more than 1.6 microseconds.
Okay, talk to me about and we're probably going to move on from all this like block building stuff, but talk to me about so Jito, what was this like sort of claim that I just skimmed by on Twitter that you guys have, I say you guys, I'm not accusing you of this, but the accusation is that their Solana structure actually resembles PBS a lot right now. Or the block packing idea. And you guys were talking about tick times and like how it's ordered. Like, give me a little bit of overview of that aspect of it. Like, I don't know, again, like, there's a lot of this stuff is kind of like beyond me. So I'm kind of curious, like how this fits in to the prior stuff we discussed, but what is like the current state of like the Jito, block building and like BAM and all this stuff?
Right. So let me start with what the original design of Solana was for. So the idea of the original Solana's design was that transactions would be processed in a continuous manner, almost like first come, first serve, and they would just stick an order book on top of it. And what happened is that this didn't work out so well, partly because of some technical challenges, but most importantly, because that's not what the validators want to do in their own self-interest. So when activity starts to pick up, the validators start to want to run things that don't exactly process things on a first come, first serve basis that maximize their own fees. And I think that's what Jito's claim is that you leave validators to their own devices, then we started to see some evidence that they will delay transactions right until the end and then run one big auction, sort of like ETH PBS. And so BAM was their proposed solution, which was basically similar to what BuilderNet is trying to do on Ethereum, which is we're going to be this kind of block building service in a TE. We're going to stream you transactions and you're going to execute them in that order. And that way we will do a transaction ordering system that doesn't threaten the viability of the apps. So that was kind of their idea. And then what is going on with the dashboards that they're putting out? So Jito put out this dashboard and it shows where transactions were packed in the slot. And it's relying on this thing we call proof of history, which is sort of going away soon, but has been a feature for a long time and was used for a lot of things it shouldn't have been used for. But for this particular thing, basically you're continuously hashing on top of the hash outputs that you've already done. You're doing like 62,500 hashes per 6.25 milliseconds. And so the idea is just this is a sort of proof of time cryptographically. And then periodically when you're ready to insert a transaction, you kind of take the hash, the 50,000th hash output, add it together with the transaction hashes that you're putting in, and you kind of merge them into that stream. And this kind of allows you to see when in the proof of history time cycle transactions were packed. So what Jito showed is that on the blocks that are running the harmonic software, it's all coming in I think the 50-second tick.
Yeah. It's like a massive, like, on the graph, you can see it's just like a massive bar. So like, anyways, go on. What does this indicate? You kind of said it, but like, final
right.
conclusion.
So that means that they're not sending out data the whole time. They're sending it out after 340 milliseconds or whatever, 360 milliseconds, whenever their auction is done. And so Jito's claim was, hey, we're doing 50 millisecond auctions on BAM. We're sending data out every 50 milliseconds. You guys are sending out once every 360 milliseconds. You guys are basically not IBRL here.
That's very not IBRL of you.
And so then the response, which I think some people were a little bit puzzled by, was, no, we're packing the whole time. We're just not releasing.
Right. We're just keeping it like withheld until we do release, and was like sort of the subject of debate or contention, I suppose.
Which is, I guess it's sort of an interesting point. It is sort of better to be packing the whole time and then release at the end than pack right at the end. Probably still worse than releasing whenever you're done packing that particular section. But my concern is more like, okay, maybe they're doing that right now, but if this is really an open system that's kind of everybody can compete, well, we've seen with PBS that the people who then produce the most valuable blocks are going to win the auction. And so you have people enter and not continuously pack the whole time, because you can build a more valuable block by sort of waiting till the end to pack it. Even if you have less CU in the block, it'll still be more valuable. And so,
but there's no, sorry to interrupt, but confirm that, again, there's nothing really at a protocol level that you can do to, or is there, are you basically reliant on somebody like Jito having, or, at least proclaiming to IBRL harder?
No. I think this is one where we do have tools. That's what multi-proposer is for. It's to take the power to sequence into the protocol and make it so that it's very consistent and so that it is that 50 millisecond or even shorter tick rate, and people are kind of forced to send out. We do have tools for that.
Yeah. Okay.
We can put timeouts in. We can condition the voting on those timeouts, and we're going to put those in. But just very simply, we could say, let's take all the C that you have and split it up among the POH ticks. So if you want to wait, then this will not solve the problem on its own, but it is an illustration of a tool that you could use. There are 64 POH ticks. We'll divide the CU among them all, and you've got to use the CU in the POH tick that you have. Otherwise, you lose it. That's one thing. Then we could do a thing where you have to send out the shreds for these POH ticks before this timestamp, or we won't vote yes on the block. And these are all things that are possible to do in the protocol today to sort of stop this. And the real question is, do we want to do those piecemeal? Do we want to do them one by one, or do we want to do them all at once? And which is better for the market structure? Because each individually has its own trade-offs. And if you put a bunch of the pieces in and you don't put the last piece in, then maybe people can still get around it, and you've kind of compromised a bunch of other things that you wanted to do in order to get somewhere where you didn't actually end up getting because you didn't put the last piece in. So
okay, and then MCP solves this because it breaks up blocks into mini blocks with more proposers. Is that the idea?
Yeah, there's just no power to order in the. There's no way to wait. There's no way to order. We have much more frequent batches from the perspective of the protocol, so that you have a 50 millisecond timeout that you got to deliver your transactions by that time. Otherwise, they don't get in. So you can still wait the 50 milliseconds, but you can't wait the 400 milliseconds.
Got it. Okay, there was actually a question that I forgot to ask, and we're finally going to move on from all this stuff. But I remember when I was talking to Benedict, one point that he brought up, and I thought about it subsequently, I don't know how much, but his point was that one part about Prop AMMs that is a bit different, and maybe, I don't know if it's cause for concern or if it's just something that, in his view, sort of changed the dynamics, was that when you deal with Prop AMMs, it sort of, in his mind, breaks composability in a sense, because you can be shown, I'm being overly reductive here, but tell me if this is generally the right thinking. You can be shown a quote and you can sign on it, and then they kind of have a last look that breaks some, I don't know if it's exactly this, but some kind of atomicity that we think of when we think of composability. Is this true? And does this make us have to kind of massage the, Foley's big idea of composability? Or is this just a market construct that, because it provides much better, execution and user experience going forward, is kind of here to stay?
There's some aspects of it, I guess. So one thing is, do you show the quote that their user actually receives?
Right. And that's a problem with aggregators, because you don't necessarily, you won't always know for sure. But the aggregator can also stop giving quotes to users from people who are pulling them, and switching it up.
Yeah. So for the aggregators, what they've started to do, there's a couple solutions. One of them is, what if we did the aggregator on chain so that you can't yank the quotes? We just kind of test you and then go through. The other one is to build this predictive model of how good the fills are on each, so flow score of how good that stuff is. And, Nitesh would be a much better person to talk about this stuff, but the aggregators are getting smarter. And then Eugene's been talking a lot as well about the fusion between aggregators and Prop AMMs and sort of that design space of, if you had both of them, what do you do? So I would say it has been a problem, but I expect it, some problems are like, this thing is super problematic and we're going to run into a brick wall at some point. And other problems are like, oh, people are going to get more sophisticated and figure it out. This is the second type of problem. Whereas I think censorship resistance and block building is the first type of problem, where it all looks fine until it doesn't. And then there's nothing you can do. There's no iterative approach that kind of digs you out of the hole. You just got to do a big thing. Whereas for the aggregator side, it's kind of, we can chip away at the block a little bit and just do a little bit better every day and get the aggregators to be more fair and give users better prices. And that improvement has already happened and it continues to happen.
I did a podcast with Toli, I don't know how long ago, maybe like 6 months ago. I was around whenever the Seeker came out, the phone. He seemed very cognizant of Hyperliquid, and Hyperliquid seemed to really kind of light a fire under your ass, like, because they sort of, I wouldn't say they came out of nowhere, but like it was a pretty quick and dominant in perps, and at least Dex perps, right? Like within a couple years. First of all, did you feel the same way? Did you look at Hyperliquid and like, whoa, like this, Solana was supposed to be the blockchain to house all of finance, and now there's like Hyperliquid over here, and they're saying that they're the blockchain to house all of finance. Like, how do you feel about, like, especially now, a little bit of retrospective? What are your thoughts on, Hyperliquid?
I don't think some people seem to think that like maybe they're on the decline now. I'm not sure we've heard the last of them. I still think of them as our most competent and credible competitor in the space of things that we're trying to build.
Well, I mean, okay, wait. When you say people think you're on the decline, who even says that?
Oh, you can look at the fees partly because of the lighter points program.
But Solana fees are down 90% from the peak. So like, I mean, it's more no. But I'm just saying these are market fluctuations, right? Like I'm the biggest critic and cynic, right? And like I'm over here saying like this is just ebbs and flows of the market.
Well, yeah, I'm saying like there are people who are looking at their market share and saying, oh, they don't seem to be a problem anymore. I'm saying the opposite. I still think that they're our most competent and credible competitor in the segment that we're trying to go after. And so I think they're a super strong team. I think Jeff is super smart. We're looking at what they're doing and trying to learn. Jeff is also looking at what we're doing and saying, oh, I think he had a tweet about multiple proposers recently where he was like, we're going to try and do this too. We think this is a good idea. So I don't know if I would quite view them as a peer yet. I think from a competence perspective, clearly a very competent team. Definitely would put them in a peer category in terms of the team competence. There is a network effect that we have that they don't have. But to the extent that we're worried about any other team, it's that team and that type of approach to the system.
But do you think that, like, why has Solana not been competitive on perps? Because I think that one thing that Hyperliquid, they approach this from an application level, right? Like a perp, the Hyper VM is like very much, I would say like it's not at the forefront. Like their perps trading application is the selling product, and they approached it very much from an application perspective, especially at its inception. Obviously, Solana general purpose, but why has Solana not been able to compete on perps? And do you think that Jeff saw something in perps that like maybe Solana hadn't for quite a long time?
I guess there's sort of 10 things you need to get right to get perps right, and there's maybe 3 or 4 things you need to get right to get spot volume right. And we have enough of the things for the spot volume, and many of the things that you need to get right are actually on the team building it. Like the front end needs to feel snappy, and The docs need to be great. Part of it is on the chain. The transactions need to land, especially the liquidations. You need to have some aspect of I guess you don't necessarily need this maker advantage thing, but it's nice to have. But yeah, you really need landing reliability, and until recently, we didn't really have that. We didn't have that P99 reliability that you would need.
So is that
we're starting to get there?
You think you are starting to get there? Because I think that was from, at least from a technical level, what I understood as well, is that you like no competent team. Well, okay, maybe that's that's a bit derogatory, because there are teams building perps and have been on Solana. But I think the argument was that, like, if you have this, like you said, like, inability to be consistent with linear transactions, like a perp deck just simply cannot work like that. It will never function. And there are some advantages to the fact that Hyperliquid, started a bit more centralized, and there's still some sort of vectors of centralization that do like allow for, the taker speed bump, but just also the, closed source nature. There's some aspects of it that give it like, a better experience maybe than could ever be offered on Solana. So are you saying that you do think that's there now, or is something like Ace absolutely critical, right? Like the ability for a perp deck to like be able to order all of the transactions itself.
I think, you got to land the transactions. That's just a no-brainer, that if you don't land the transactions, then you don't land the liquidations, and then the perp deck blows up. So that's just like obviously needs to be there for the user experience to be snappy. Then stuff like Ace is more of a nice to have. It makes the markets tighter. It's important in that it can help with the consistency of landing the liquidations. I think we're sort of at a point where a really competent team could build a great perp decks, keeping in mind all of the wrinkles that you have on Solana. There are some nice things, like Solana does have more uptime than a standard centralized exchange right now, especially with the improvements that we made to the TPU pipeline. Like, you actually do have some nice properties there that are better than what you can get on a hand-rolled system. But yeah, I think part of the learning from Hyperliquid is you needed a team that really understood trading, that had deep knowledge of microstructure, that could kind of bootstrap by providing liquidity themselves on new pairs. And yeah, I'm really excited about Phoenix Perps, because I think Eugene and Jerry and that and Rahul and that team are like the right people to really understand the deep intricacies of the Solana market structure and of perps and derivatives trading. I'm really excited about what they're doing. I think Drift has also been shipping a lot of improvements too on that front, and we've been helping them, and we have more tools to help them as well. Yeah, it takes a while to build a really good perp decks. Like, Hyperliquid wasn't a winner in 1 year after launch. They were doing like $1 million of volume on Friendtech indexes. So I think it's something like, it's not going to be fixed in a day, but in 2 years we can revisit the question and see how that's doing. We have a lot of things that are advantages. We have a lot more natural network effects that when we really crush it with a product that works, I think it's going to take off.
All right. Well, Max, fantastic. Thank you as always. Appreciate you reading the Ellipsis ad. Really good stuff here. Thanks for coming on.
Yeah. Thanks for having me.